Welcome back, everybody. Today, AMD and Microsoft released their Q4 2023 earnings results. Let's get into it. So, let's start with AMD. AMD is at $172 per share, down 3% today. After hours, down 1%. So, let's take a look at the results. Oh, by the way, AMD is up 100% this year. So, the results have to be good in order to keep up with this share price. So, what are expectations? This quarter, analysts are expecting AMD's revenue to grow 9.6% year on year to $6.14 billion. Adjusted earnings are expected to come in at 77 cents per share. You can see the little chart right there. So, let's check out the report. But first, don't forget to like and subscribe. Now, the thing I am focusing on for AMD is the MI300, and I'm just going to look at the report and just see if they discuss it, honestly. This is the most important product in AMD's launch in their history since the Ryzen. And they were expecting results of $2 billion in 2024, and let's see if they increase it. This competes with NVIDIA's H100 and upcoming H200 series chips. This is their AI accelerator. This is the monstrous chip that they released in December. And also today, AMD got a downgrade to outperform on AI revenue expectations by Raymond James downgraded them from strong buy to a buy, essentially. Anyway, let's get on to it. Oh, by the way, I have a Patreon, and there's only one seat remaining for my $1 special. Now, this $1 special, you get access to all my past, present, and previous valuation spreadsheets, investment analysis reports, exclusive access to my Patreon portfolio, and else, other stuff. So let's take a look at the report and see what we got. AMD financial results, fourth quarter and full year 2023. It just goes over, these are blah, blah, blah. These are their segments. What do we got? Okay, the MI300 in volume production. That's good. It's expected. Volume production should have started last year. Let's see, Microsoft, Meta, Oracle. We know most of those already. And then the MI300A is also in volume production. That is good. They released, these are their partners and innovators, Databricks. Okay, that's fine. So what do we got? We got full year revenue of $22.7 billion in 2023. But let's look at the quarterly results. Growth in embedded and data center segment revenue is more than offset by lower client and gaming segment revenue. Yeah, the thing is, the client segment in late 2022, early 2023 cratered. It was the worst period in PC recorded history for that segment. It was disastrous. So that's what they're coming up against, is that. And that's included mostly in this year's results. That's why it's down this year. And it hit the entire segment, hit Intel, AMD. The entire client segment was disastrous. However, let's go to Q4. So Q4 2023 compared, this is year over year. So it was $6.2 billion compared to last year's $5.6 billion. That's an increase of 10%. That's a nice growth. Growth in data center and client segment revenue is partially offset by lower embedded and gaming segment revenues. So the Xilinx is down. That is actually a repeat from Intel's warning. They also warned that their embedded segment was also down, which pairs with this one. The embedded is the Xilinx acquisition. It's essentially the FPGA market. Okay, so yeah, $6.2 billion. How does that compare to expectations? Where was that? Right here. So $6.14 billion. So it's a beat. $6.14 billion expected, and the earnings results were $6.2 billion. It's a beat. Gross margin, let's see here, 46%, 50% non-GAAP. Again, this is due to lower client segment revenue, which we discussed. Okay, that's fair. That's fine. Gross margin in the fourth quarter increased nicely over the last year from 43 to 47%, because they're kind of getting over the hump of the client segment decline. They've mostly gotten over that hump, so the GAAP margins are improving. Non-GAAP is steady. That is good. Operating income full year 2023. What do we got? See, GAAP $400 million, non-GAAP of $4.9 billion. GAAP operating income decreased year over year primarily due to lower client segment. We discussed that, and there's also an increase in R&D investments. That's for their future growth, particularly in AI. They're researching a lot in AI right now, partially offset by lower amortization of acquisition-related intangible assets. So again, this is acquisition related. So this is basically Xilinx stuff. It will go away. It's one-time stuff. So we don't need to be concerned. We don't need to be concerned about that going forward. It's just Xilinx one-time acquisition costs. Non-GAAP operating income decreased primarily due to lower climate increase. We discussed that. Okay, let's see here. What do we got here? Operating income loss Q4 2023. So it was a profit of $300 million compared to actually a loss the previous year's quarter. Non-GAAP is nice, grew as well. GAAP operating income was driven higher by data center, that's the AI segments, and client segment revenue, and lower amortization of acquisition-related intangible assets, partially offset by increase in R&D and marketing investments. Let's see, they didn't mention marketing before. Let's see, earnings per share. What do we got? Let's see, 53 cents. This is for the year. Let's go to the quarter. So non-GAAP is 77 cents. What was expected? What was expected was 77 cents. It's a meat right there. That's good. Let's see, non-GAAP net income $1.2 billion, up 12% year over year. 77 cents, up 12% year over year, primarily driven by higher data center client segment revenue. We went over the reasons several times already. Okay, so what do we got? Full year. Let's just skip down to the quarter because full year again was hurt by the stuff at the beginning of the year, but I'm more concerned about this quarter. Let's see here, full year summary, profit and loss. Let's see. Okay, fourth quarter. So revenue $6.1 billion. That's up 10%. Gross profit $2.9 billion, up 21%. So their margin, that's due to their margins getting better right here, up 4 points. Operating expenses are flat year over year, and then quarter over quarter. And quarter over quarter's numbers are increasing, 6% flat, up 2%. So the operating income is nice, $342 million, up 130%. Again, you're going from a negative number to a positive number. Operating margin is 6%, up 9 basis points. Net income of $667 million compared to last year's quarter four of $21 million, up 3,000%. Don't put too much stock into this number. You're going from a number that was virtually zero. So obviously that's not going to continue. That's not going to continue, but it looks nice. Earnings per share 41 cents, up that. These are GAAP numbers, so let's go to the non-GAAP. Non-GAAP is a little bit more important to me. For companies like AMD, it's more consistent and more comparable year over year because it includes less one-time items. Revenue up 10%, gross profit up 10%, operating expenses up 8%. Let's see, anything special? We went over most of those numbers before. Now, revenue, you can see it's increasing again. So after the declines earlier this year, it's on the right track again. Gross margins looking good. Non-GAAP gross margins steady. Earnings loss per share. So this is actually looking really good. For a GAAP basis, 41 cents. It actually dipped into the negatives. And then virtually zero. So it's going back to being recording good numbers. Earnings per share non-GAAP is trending back up again for same reasons as before. I don't want to dwell on any of these items too much. You can look into this report yourself if you want more specific information. Let's see, debt's flat. Cash and equivalents are flat, which is good. They're doing a lot of share buybacks right now. So that's all good. Okay, segment results. What do we got? This is what I want to see. So data center is up 7%. Now the thing is, the MI300X only started shipping late December, so that was in very small volumes, and you're going to see it more in next quarter's report, which is this quarter. Is when you're going to start seeing the MI300 actually showing up in this report. So this up 7% is actually not because of the MI300, it's because of other reasons. Operating income is down 31%. It's interesting. I have to look into the reason why that's down so much. Let's see, client net revenue is down 25%, operating income is down 104%. So that was actually, oh, this is full year. Full year. Again, yeah, so this created full year. Gaming, yeah, those are down. So let's go to the quarter results. Sorry. All right, so quarter data center revenue, $2.2 billion, well, 2.3, up 43% quarter over quarter, up 38% year over year. Operating income's up 50% year over year, 666. Let's see, clients profitable again. It was negative before. So that's nice, very nice. Client is up 62% year over year, and it's up 136% year over year. So that's very good. Gaming's kind of struggling, and embedded is really struggling. And again, this matches Intel is embedded segment struggling. Gaming's a little bit different. Gaming's, they're gonna have to figure that one out. Let's see, data center segment Q4 2023 increased nicely, up 38% year over year. Revenue $2.3 billion compared to $1.7 billion. Margins improved. Okay, what do we got? Anything about the MI300? I want MI300. See, strong growth in both AMD Instinct GPUs, right here, and 4th gen AMD EPYC CPU sales. Operating income primarily due to operating leverage driven by higher revenue. What do we got? AMD announced availability of AMD Instinct MI300X GPU with leadership generative AI performance and AMD Instinct. Yes, I know. Blah blah blah. ROCm 6. 800 AMD EPYC CPU-based public cloud instances are now available. AMD processors power 140 supercomputers in the top 500 supercomputer list. Okay. Where's the MI3? I want a revision of the AI segment. I don't want the 2 billion anymore. I want to see a revision upwards. I don't see it. You see, client segment improved drastically. Up 62%. Went from, we discussed all this. Let's see, announced Ryzen 8040 series mobile processors that has the built-in AI into the chip itself, into the CPU, with an AI NPU is what they call it, delivering up to 60% more AI performance than the Ryzen 7040. And millions of Ryzen chips, current market. Oh, now powering more than 90% of AI-enabled PCs currently in the market is powered by Ryzen CPU. So that's, wow, that's good. They're beating Intel in the market right now for that. Again, Intel just released Meteor Lake, which is their equivalent of this AI-enabled PCs. So we'll see how that goes going forward since Meteor Lake just released. Let's see, launched the AMD Ryzen 8000G CPUs, blah, 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 nothing else there. What happened here? I'm trying to figure out what happened to the gaming segment. Are they just not are they not performing to NVIDIA? Are they not competitive to NVIDIA? Let's see, lower semi-custom revenue. That's semi-custom in gaming is the Xbox and the PS5. Partially offset by increased Radeon GPU sales. Okay, so they're blaming the Xbox and the PS5. So probably actually the Xbox is what they're probably blaming here, since the PS5 is actually growing quite nicely. Okay, at least it's profitable. That's all I really gotta say about this segment, is at least it's profitable. Okay, let's go on. Embedded. So yeah, primarily due to customers reducing their inventory levels was their FPGA Xilinx issue. So this is having trouble right now. I think this is having difficulties because people were leveraging FPGAs for artificial intelligence, but they don't have to anymore. Now you have the NVIDIA H100, and you also have the AMD MI300X. So you don't really need the Xilinx AI for AI anymore. You can leverage those much faster options now. That's what I'm assuming to be the issue here. I'm not sure completely. It's off the top of my head. We'll probably learn more on the call. People will definitely ask about this, so we'll see more specifically why. Launched that, and automation, machine vision, and robotics, and edge server applications. Okay. Okay, the outlook. What do we got? Anything about the AI? No. Revenue $5.4 billion in Q1. Gross margin 52%. Operating expenses $1.73 billion. Tax rate 13%. Diluted share count 1.63 billion. Let's see. That's okay. Full year summary. We went over these numbers. Okay, anything special here? A lot of numbers, but anything special? We went over most of that stuff. I don't see anything that sticks out. The share count is actually increasing a little bit due to stock-based compensation, so they may buy back more shares. But we'll see. So yeah, the estimated share count is increasing just a little bit. Yeah, employee stock equity grants, diluted shares, blah, 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 blah. Okay, so yeah, for AMD, good results. I was hoping for MI300 estimates to increase in 2024 from $2 billion to something much higher than $2 billion. We didn't get that. Hopefully it'll be on the call. People will ask about it, and hopefully Lisa delivers a huge boost on that. Aside from that, the numbers are great. Clients improving. The data segment is looking really good. There's trouble in the embedded segment, which we'll hopefully get more insights on. But hey, AMD is looking good. Let's move on to Microsoft. So yeah, Microsoft, current share price is $408.59. Also for them, year on year, they went up a lot year over year, $258 to $408. That's a huge increase for a company for a $3 trillion company. That is a huge year-over-year increase. And again, much like AMD, this is driven by artificial intelligence. After hours down 1.4%. Let's figure out why. See, Microsoft's expected to forecast revenue of $61.14 billion and adjusted earnings per share of $2.76. The intelligent cloud segment, that's where you get Azure and everything, that's going to be expected to come in at $25.3 billion. Microsoft Cloud overall, $32.2 billion. That would be up from $27 billion last year. Blah, 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 blah. Okay, so what do we actually get from Microsoft? Okay, for Microsoft, revenue was $62 billion and increased 18%, up 16% constant currency. So $62 billion compared to 61 point, it's a beat. Operating income was $27 billion and increased 33%. So $27 billion. Wait, what did they list here? Earnings per share. So let's get down to that. Net income was $21.9 billion. Now these are huge. Bottom line, see, the top line increased only 18%, but the bottom line increased 33%. You have to realize how massive that is. That means their margins are increasing drastically. And this goes beyond the Blizzard acquisition. Because the Blizzard acquisition, if memory serves, they only make about $500 million in profit. I think it's per year. And Microsoft records a net income of $22 billion in one quarter alone. So Activision is actually a small portion of these numbers. So yeah, their margins are going up drastically. And I think it's because of the cloud. Diluted earnings per share was up. Oh yeah, that's going to be about the same. Let's see, Microsoft completed the acquisition of Activision Blizzard on October 13th, 2023. Financial results from the acquired business are reported in the more personal computing segment. Okay, so we've moved from talking about AI to applying AI at scale, said Satya Nadella, chairman and chief executive of Microsoft. By infusing AI across every layer of the tech stack, we're winning new blah, blah, blah. Strong execution by our sales team and partners drove Microsoft Cloud revenue of $33.7 billion, up 24% year over year, said Amy Hood. So 33 points, that's a huge 24% for a company this big. I mean, they were expected to do $32.2 billion, and they did 33.7, so that's a huge beat. The following table represents the reconciles, yeah. Okay, so sorry, I'm just double checking a couple things. Yeah, these are quarterly numbers, and then these are 2022, 2022, 2023. So these are percent changes, year-over-year gap. We just went over these numbers. I don't need to go over them again. Okay, now my focus here is Azure. That is the single most important aspect of Microsoft right now. And if we can get any insights on OpenAI or just artificial intelligence in general. But again, artificial intelligence is going to be primarily through Azure or their other services and products, like maybe Office, or, for example, GitHub has a Copilot system. It's all over the organization. Okay, so revenue in Intelligent Cloud was $25.9 billion. What was the expectation there? It was $25.3 billion. Let's see, 25.3 to 20. Okay, so that's a beat. Increase of 20%. Okay, so the thing about Azure is, in more recent times, last year or two, growth in Azure has been in the low 20% range. So they're reporting here that Azure actually increased 30%. So growth is accelerating in Azure. Accelerating. And this is probably due to AI and other things, but probably AI. So it's accelerating. And to already be so big and then growing again is a great thing. Let's see, more personal computing was $16.9 billion, increased 19%. Again, this includes Activision Blizzard now. Let's see, Windows increased 9%, devices decreased 9%. They'll have to figure out the Surface issues. Xbox content and services revenue increased 61%. That's really nice, but that's including Activision. And that was 55 points of this was Activision. Search is up 8%. So that's also pretty good. That's, Bing. Microsoft returned $8.4 billion to shareholders, share repurchases, Microsoft forward-looking guidance. Let's see, what else do we got? Blah, 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 blah. Q2 charge. Let's see, in the second quarter, Microsoft recorded costs related to decisions announced on January 18th, including employee severance expenses, impairment charges resulting from the change of their hardware portfolio, and costs related to lease consolidation activities. Okay, what else do we got? And yeah, we went over most of these numbers. I want to get to the important stuff. So yeah, Azure is 30%, which is massive. And it also had a negative 2% currency impact. Okay, so yeah, let's go over these more specifically. Cloud's up 24%. Office commercials up 15%. That's really good. For something as established as Office is, that is amazing. Office 365 commercials up 17%. Office consumer 5%. LinkedIn's 9%. So LinkedIn is still growing. Dynamics is really big. 27%. That's going good, actually. I like their Dynamics. Servers 22%. Windows is growing. Windows OEM is growing. Let's see, anything else? Devices, Xbox. We went over most of those other numbers. Okay, what else do we got? Forward-looking statements. Statements forward-looking, such as intense competition, focus on cloud-based services representing execution competitive risks, significant investments in products and services, cyber attack, blah, 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 blah. It's like risks and stuff. Okay, so going into the numbers, the income statement, 3 months ended, $18.9 billion compared to $16.5 billion, and the product total revenue is $62 billion compared to $52.7 billion in the previous year. Those are all looking good. R&D is up. Sales is up. These are expenses. Sorry. Let's see, net income is up huge. Oh my God. Microsoft's a beast, and they are worth that $3 trillion. Oh, by the way, I got Microsoft and AMD valuation models at my Patreon. Don't forget. So net income, $21.8 billion. Those are looking really good. Assets, let's see, I think stand out. See, also the thing about the Blizzard deal is it was all cash. So that's probably the reason why cash is down so much. Down $30 billion is due to the acquisition. Okay, what else do we got here? Goodwill, that's baloney. Let's see here. Long-term debt increased a little bit. Eventually, they'll probably start paying down their long-term debt. We'll see. You know, rates are high. Rates are high. That's it for Microsoft. Okay, so I'm going to double check one more thing for AMD. Before I do, Microsoft's results are awesome. Their net income increased dramatically, 33%, and Azure is doing amazing. So Microsoft's results are fantastic. AMD's results are fantastic, but I want to double check one more thing. I just want to see if Lisa Su, I want to look at Lisa Su's statements on these results. I missed that. Okay, so here's the statements from the executive team. So AMD announced revenue for the fourth quarter of 2023 up $6.2 billion, gross margin 20, and we went over those numbers. Okay, here's the statements. We finished 2023 strong with sequential year-over-year revenue and earnings growth driven by record quarterly Instinct GPU and EPYC CPU sales and higher AMD Ryzen processor sales. So the Instinct GPU, this is the MI300. That's what I want. But I don't see numbers. Said Lisa Su, demand for our high-performance data centers product portfolio continues to accelerate, positioning us well to deliver strong annual growth and what is incredibly blah, blah, blah. Okay, so AMD executed well in 2023 despite a mixed demand environment, said CFO Jean Hu. We drove year-over-year revenue growth in our data center and embedded segments and successfully launched our MI300 GPUs, positioning us for a strong product ramp in 2024. Where's the numbers? I want the numbers. Strong. They're teasing me. They're teasing me. They're teasing me. Oh, they're teasing me. What else do we got here? Outlook. Okay, we saw that. AMD expects data center segment revenue to be flat with a seasonal decline in server sales, also set by a strong data center GPU ramp. Semi-custom expected to climb by a significant double-digit percentage. Non-GAAP gross margin expected to be approximately 52%. But yeah, these are great results by AMD. Again, I want to see on the call, I'm going to listen to the call. I want to see strong uplift in expectations for the MI300 in 2024. So yeah, don't forget to like and subscribe. Thank you for watching, and I'll see you in the next one.